If you think the Queensland property boom was slowing down, think again. Interstate investors are back, and they're coming in hot. From Brisbane's outer suburbs to the Sunshine Coast, they're snapping up house and land packages and pushing up prices faster than anyone expected. So, what's going on here? And more importantly, what does this mean for you as an investor? Well, in short, South East Queensland has become the new gold rush for property investors, especially for those priced out of Sydney and Melbourne, where affordability has gone from bad to brutal. Right now, Brisbane's outer ring, places like Ripley, Lilywood, Narangba, and Park Ridge, is seeing massive demand for house and land packages. Why? Because they deliver more bang for your buck. Let's break it down. If you were to buy a new medium-rise apartment in Brisbane's inner city, you'd be paying roughly $20,000 per square metre. Step out a little the middle ring, and you're still looking at around $10,000 per square metre. But a brand new house on land in the outer suburbs, you're paying closer to $5,000 per square metre. That's half the cost for twice the space. So, investors are asking the obvious question, why pour money into a tiny city unit when you can get a full-sized home for less? It's simple economics, and investors from across Australia, particularly from Victoria and New South Wales, are catching on fast. In fact, new data from independent valuer Heron Todd White shows a surge of interstate migration into Logan Bow Desert, Moreton Bay, and the Sunshine Coast over the past 12 months. These are the hot zones right now, and they're not just moving there, they're investing. Here's the kicker. Apartments that were once collecting dust have suddenly roared back to life. Some buildings have seen price jumps of up to 44% in just a few months. That's the power of renewed investor demand colliding with tight supply. Now, let's talk numbers from the ground. Developers like Creation Homes are struggling to keep up. Demand for their house and land packages across South East Queensland has outpaced supply, and investors are going head-to-head with owner-occupiers for every available block. Add in near-zero vacancy rates and strong rental yields, and you can see why this region is becoming a magnet for smart money. Put simply, scarcity plus growth plus yield equals investor heaven. But there's more to this than just cheap land and high returns. Victoria's new tax reforms have quietly nudged investors north. When you combine that with Queensland's booming infrastructure pipeline and the global spotlight of the 2032 Olympic Games, the long-term growth story becomes impossible to ignore. And here's another factor that's quietly driving prices: the federal government's home guarantee scheme expansion. That's opened the door for more first home buyers in the sub-$1 million market, and when that demand spikes, competition follows. So right now, anything under $2 million is running hot, and anything above $5 million still moves well. But the middle range, that's lagging, which means opportunity for strategic investors who can spot the gap. Another interesting trend, those inner-city buildings built back in 2016 and 2017 that once underperformed are finally bouncing back. Investors who held on through the pain are now seeing strong capital gains. That's a reminder, patience in property still pays. But what's fueling all of this? A mix of migration, scarcity, and frankly, a lack of better options. According to economic analysis, property is looking relatively safe compared to other asset classes. Equities are overvalued, bonds aren't delivering much spread, and inflation is still a concern. So when you put property next to all that, even with modest yields of 3 to 4%, it suddenly looks like the smartest place to park your cash. Of course, there's one big challenge looming: supply. Construction just isn't keeping up with demand. Builders are stretched, costs are high, and housing targets feel more like wishful thinking than reality right now. That's the real risk for investors. Not prices falling, but not enough homes being built to meet demand. And that scarcity, ironically, could be your biggest win. Because when supply can't catch up, rents climb and capital growth accelerates. But there's a caveat. Don't expect rate cuts to save the day anytime soon. Experts now believe we may not see another cut until at least May next year. And even then, it's not guaranteed. The days of 2% interest rates are gone. A new normal closer to 5% is here to stay. So what's the takeaway? Investors who understand the fundamentals, population growth, infrastructure investment, and supply shortages are positioning themselves to win big. Those who hesitate could find themselves priced out all over again. Right now, South East Queensland isn't just a hotspot, it's the front line of Australia's property future. Brisbane's outer suburbs, the Sunshine Coast, and Moreton Bay, these are the battlegrounds where affordability meets opportunity. So if you're looking for value, yield, and long-term growth, this might just be your signal. Because while everyone else is waiting for the perfect moment, smart investors are already buying the land that everyone else will be renting from in 5 years' time. Queensland isn't just getting hotter, it's turning into Australia's next investment powerhouse. And if you're not watching closely, you might just miss the next property boom before it even begins.